Good morning and welcome. You're watching Market Cafe on ET Now. I'm Harsh Saita and with me is Ankita Saxena. Ankita, the SGX Nifty already indicating a 0.25% of a green start at least. So looks already very positive. But what we will do on this show is we'll take you through all that's happening in global markets. Of course, we had a holiday, so slightly truncated week for Indian markets at least. But we'll quickly take you through what global markets have been up to, and we'll take you through all the news as well as on the business front as well as on the corporate front over the next 1 hour or so. So do stay tuned. But let's quickly start off with global markets. Ankita, how are global markets responding?
So just like the SGX Nifty, Harsh, even the US markets ended the day on a positive note, and that came on the back of the fact that the major bank names gained after passing the Federal Reserve's annual stress test and a revised upward GDP print that really alleviated some of the recessionary fears that have been plaguing the Wall Street. So the Dow Jones Industrial Average jumped 269 points, lifted by the major banking names. The S&P 500 added 0.4%, while the tech-heavy Nasdaq Composite closed absolutely flat. JP Morgan Chase and Goldman Sachs each rose more than 3%, while Wells Fargo advanced 4.5%. Now, the action came in a day after the central bank said that all 23 institutions included in its annual stress test as well as capitalized to weather a severe recession scenario. Now, a slate of positive economic data also came out that signaled towards an economic resilience despite the looming recessionary fears. Now, that included a large upward revision in the first quarter GDP. Now, the first quarter economic growth was actually 2%, up from 1.3% first reported in the major GDP revision. Now, we also saw a drop in the weekly jobless claims to the lowest level since May. That came in at 239,000 last week versus the estimates of 265,000. So overall, a healthy economic scenario versus addressing the recessionary concerns that have been doing the rounds in the US markets. So on the back of that, the US markets rallied yesterday. Now let's come to the European markets. The European equity markets closed mixed as investors assessed the commentary from the leading central bankers on the need to continue to fight against the inflation. The Pan-European Stock 600 ended the day up 0.1%, with retail stocks adding 1.8% to lead the gains on the back of robust earnings that came in from a retail giant H&M that surged 18% in trade. Now, DAX closed the day in the red, absolutely flat, 0.01%, but was ended the day in the red, flat. FTSE also down 0.3%, largely flat, but was in the red. So a mixed cue coming in from the European markets, but a positive handover coming in from the US markets, Harsh.
Well, absolutely mixed from Europe, positive from the US, and let's quickly look at where crude is, really headed at the moment. And when I'm looking at crude, one is, of course, the hawkish central bank commentary continues, and that will spook oil markets. In fact, oil markets were quite soft in any case to start off with that commentary, but even now WTI is below that $70 a barrel mark. You're looking at Brent below $74.50 a barrel. And let's also look at the other piece which was moving in trade, at least with regard to oil. The US Energy Information Administration said that crude inventories have fallen by around 9.6 million barrels out there. So, and the fall expected there was just about 2 million barrels, or just below 2 million barrels. So clearly a larger fall than expected. US seems to be depleting some of its reserves, which is also aiding oil prices, keeping WTI capped at 70 at least at the moment. So WTI below that $70 a barrel mark. Oil not really a concern at the moment with regard to prices.
Right then, Harsh, moving on to the global headlines then. The Federal Reserve Chairman Jerome Powell says more tightening power coming through. He also says that the markets can expect 2 more rate hikes ahead, possibly at an aggressive pace to bring inflation down. Now, he was speaking alongside other global banking leaders at the ECB forum in Portugal. Listen in to the excerpts from this conversation.
Let me say the U.S. economy has actually been quite resilient, and the data that we're still seeing, including since the last meeting still is consistent with with an economy that's resilient and growing albeit at a modest pace. As I mentioned earlier, though, yes, there was no question. The first question was how fast should we go, and we went pretty fast, and we got to a level that we believe is restrictive. We're in restrictive territory. If you take the federal funds rate and you subtract some forward-looking measure of expected inflation, you'll get a significantly positive real rate, meaning we're probably in restrictive territory. So, and I think we have steadily slowed the pace of our moves, and it's appropriate to do so for one reason, because the more information we get, the better decisions we'll make. The risks of doing too much versus doing too little become more in balance. I wouldn't say they're in balance yet, but they're becoming closer to balance. I still believe and the committee clearly believes that there's more work to do, that there are more rate hikes that are likely to be appropriate, though.
Right. Sticking with the macros from the US, the number of Americans filing for unemployment claims fell by the most in almost 20 months. Claims for the week ended 25th of June decreased by 26,000 to a seasonally adjusted 239,000. Signs of resilience in the labor market vis-a-vis a robust economy could push the Fed to resume raising interest rates as soon as July. We had the Fed chair speak about that. Of course, the claims drop is the most in 20 months.
Meanwhile, consumer prices in the Japanese capital rose 3.2% in June on an annualized basis, exceeding BoJ's 2% target for the 13th straight month. Economic data pointing towards broadening inflationary pressures in what could result in the BoJ's phasing out its ultra-loose monetary policy soon under the new governor, Kazuo Ueda.
Right, and in a major blow to China, US and Netherlands have gone ahead and are set to restrict sales of chip-making equipment in a bid to prevent their technologies being used to strengthen China's military. While the Dutch are planning to curb certain equipment from national champion ASML and other companies, the US is expected to go one step further and use its long reach to withhold even more Dutch equipment from specific Chinese labs.
And Sweden's currency krona hits a new record low on Thursday after the country's central bank raised interest rates by 25 basis points and played down the possibility of market interventions as the currency falls and due to the economic slowdown. The currency was seen to be dropping to 0.0844 krona as compared to the euro. The central bank also anticipated at least one more hike this year.
Right, and in a major blow to affirmation action policies, the US Supreme Court issued a ruling on Thursday that invalidates race-conscious student admission programs, which is currently used by Harvard as well as University of North Carolina. Meanwhile, former President Obama, who argued that these policies were essential to ensuring that all students, regardless of race or ethnicity, have the opportunity to succeed. US President Joe Biden strongly disagreed with the Supreme Court's decision. He added that the court's ruling walked away from decades of past precedent.
Well, that was the news coming in from the global arena, but we will have to slip into a short break, but you don't go anywhere. After the break, we go domestic.
Right, welcome back. You're watching Market Cafe on ET Now. Let's quickly take you through how Asian markets are doing. We did speak about how global markets closed. For those of you just joining you, US largely in the green, and we're seeing Europe largely mixed. So let's quickly look at Asia. Shanghai is slightly higher, around 0.25% or thereabouts is what the current indication is. Just about marginally higher. Let's quickly look at its counterpart in China, the Hang Seng as well. You're looking at a slight bit of red, but that's absolutely flat. You're looking at a slight negative bias coming through from the Hang Seng. Looking at the Kospi, which is also currently in the green, around 0.33% higher for the Kospi. The Nikkei is in fact lower in trade. So negative cues coming in from Japan, 2/3% lower on the Nikkei, and you're looking at the ASX 200 again largely flat, just 5 basis points in the red. Slight negative bias coming in from Australia as well. So largely it's a mixed set. You're looking at the SGX Nifty, which is indicating 0.25% of an uptick. Hopefully at the start we continue in the green from where we left off on Wednesday. Ankita.
All right, then hopefully a positive start for the Indian markets as indicated by the SGX Nifty. And we'll move on then with an aim to becoming more competitive in the export markets and providing cheaper goods to people. Indian government is aiming to bring logistic costs in India to single digits of up to 9% of the GDP before 2024 end from the 14 to 16% currently. Now, the announcement was made by Minister of Road Transport and Highways Nitin Gadkari at the 10th edition of the Economic Times Supply Chain Management and Logistics Summit 2023 held in New Delhi. Sumit Chaturvedi gets you more details on this.
High logistics costs of a country directly impact the competitiveness of its businesses in the global market. The exported goods are at a disadvantage compared to the international counterparts, which have lower logistics costs. Now, to increase India's competitiveness in global markets, the government is targeting to reduce logistics costs before the end of 2024 to single digits. India's logistics and supply chain management industry discussed the opportunities and challenges faced by the industry at the 10th edition of the Economic Times Supply Chain Management and Logistics Summit 2023. The theme of the summit was adaptability, sustainability, and visibility in the sector. Apart from the Union Minister of Ports, Shipping and Waterways, Sarbananda Sonowal, the event was graced by Minister for Road Transport and Highways as well, Nitin Gadkari.
Reduce the logistic cost. So fuel and road, these are the two important things which we need, by which we can reduce the logistic cost. Our target is to reduce the logistic cost before end of 24 to single digit. We are trying to take it up to 9%, and by which we will be more competitive in the international market, and then we can increase our export.
In comparison to India, logistics costs in China as compared to India form 8 to 10% of the GDP, while for European nations and the United States, that figure stands at 12%. The government has rolled out a national logistics policy and PM Gati Shakti with an aim to boost competitiveness of the industry and reduce logistics costs. India is also trying to develop its waterways for carrying cargo, as around 70% of the goods traffic is currently moved through road network. Carrying cargo through waterways and the development will bring down the logistics costs massively.
The water transport is very important. As far as China is concerned, there are 47% of the traffic is on waterways, and that is one of the reasons that their cost is very less. So all the people who are here present who are concerned with the logistic business, first of all, my request to all of you that try to use this availability of already waterways in the country. There are some problems on small levels, but if we can start it, we have 40 river ports in Ganga and a multimodal hub at Varanasi, Haldia, Sahibganj. And Varanasi, Sahibganj, Haldia and Gazipur. The 4 places we have multimodal logistic park. So my suggestion is, even by Brahmaputra we can go up to the all northeast states.
Alternative fuel is the other option to reduce logistics costs. As an alternative to diesel, transport vehicles are already using CNG, while methanol-based vehicles are also developed for transport that will bring down the cost of running vehicles. India is also massively developing highways and road network with an aim of decongesting road traffic and saving on fuel and logistics costs. Government estimates suggest that by the end of current year, a majority of road work under construction will be completed. Bureau Report, ET Now.
Right, but it's that time of the show where We'll take you straight to the impaired segment and we'll slip into a short break. More, of course, on the other side on the domestic front.